Now the topic before us is understanding the differences between balance of payment and balance of trade. Here we are to discuss the difference between balance of payment and balance of trade. Firstly, we should understand what is balance of payment. In this world, there are a large number of countries. A country may be having many things which may be having in abundance. So it will be exporting those goods to the rest of the world. Some things a country may be having in shortage, so it will be importing those goods from the rest of the world. In the same way, a country may be exporting certain services to the rest of the world, and it may also be importing or receiving certain services from the rest of the world, such as banking, insurance, shipping, transportation, etc. Sometimes we provide aid to the rest of the world on humanitarian ground in the form of, say, money, food, medicines. At times, when there are natural disasters, say lot of floods or other reasons, we may be receiving foreign aid from the rest of the country. Then we are maybe having certain investments in foreign countries, and from them we may be receiving certain incomes in the form of income, dividend, profit, interest. And at the same time, foreign investors may be having certain investments in our country, and they may be receiving payment from us in the form of dividend, interest, profit. Sometimes we borrow loan from the rest of the world or foreign institutions, and sometimes we also provide loans to the rest of the world. Sometimes we make investments abroad, and sometimes they make investments in our country. So BOP is a systematic record of all the economic transactions which take place between the residents of a country and the rest of the world. We have already discussed in detail what is the meaning of balance of payment. So balance of payment is a very big concept. As already discussed, balance of payment has is three components. First is current account, capital account. Although I am using A/C in place of account, you are to write completely. And the third is financial account. In the current account, we take into or record the transactions which pertain to export and import of goods. Then we record in current account the transactions related to export and import of services. Then unilateral transfers received or paid, received and paid. We may be receiving certain investments, we will be also taking note of the same, and what in unilateral transfers we have paid, we will be also taking the note of the same. Then income from investments paid and received. In the capital account, we take into account the transactions related to acquiring or disposal of non-produced, non-financial assets and capital transfers. And in the case of financial account, we record transactions pertaining to foreign portfolio investment, and there is also official reserve account. We will discuss all this in detail. Now we concentrate on BOT. Here we have discussed we have an overview of balance of payment. So when we are talking about balance of trade, these two items, export and import of goods and services, pertains to balance of trade. Balance of trade means the difference between the value of exports of goods and services and import of goods and services. So from this overview, you can see that balance of payment is a very bigger concept, and balance of trade is only related to is a very narrow concept, and as compared to BOP, and as it pertains to only it is only the difference between export and import. Further, balance of payment has three components: current account, capital account, and financial account, whereas balance of trade is only a sub-component of balance of payment. We will discuss each of all the differences between BOP and BOT in detail. Let us see. The balance of payment is a systematic record of all economic transactions which take place between the residents of one country and the rest of the world over a specific period. We have already discussed in detail the meaning of residents. Residents means individual residents, businesses, and government and its organizations within the jurisdiction of the country. In the case of residents, as discussed in the definition of balance of payment, does not include diplomatic staff, foreign military personnel, migrant workers, etc. On the other hand, balance of trade is only the difference between the value of a country's exports and imports. The components of BOP are balance of trade, unilateral transfers, income, investments, loans. Balance of trade is only a part of BOP under the head current account. Equation: balance of payment is the sum of current account, capital account, and financial account because it has three components. On the other hand, balance of trade is equal to exports minus imports, exports of goods and services and imports of goods and services. Surplus balance of payment occurs when there is more inflow of foreign exchange than the outflow of foreign exchange total. When we discuss balance of payment, we record all the items. Here we record debit items, here we record credit items, and after listing all the items, such as if there is credit, it is a positive. When there is outflow of foreign exchange, it is recorded on the debit side. All the items which result into inflow of foreign exchange are recorded on credit side, and all the transactions which result into outflow are recorded on the debit side, and we make a total of the debit side and current side. And if credit side is more than debit, it is surplus BOP, and if credit is less than debit, that is inflow is less, outflow is more, then it is deficit BOP, deficit balance of payment. BOT is surplus when exports exceed imports, and balance of trade is deficit if exports are less and imports are more. Significance: balance of payment is a wider concept. It provides a broad picture of the country's international economic activity, whether exports are more in comparison to imports. It will also provide what is the position with regard to unilateral transfers, whether we are receiving more in the form of unilateral transfers or we are paying more in the form of unilateral transfers, whether income received from investments is more, or we are making more payment to the foreigners in the form of income on investments. And we will also understand whether capital transfers are more or less. We will have all this. So balance whether investments we are making abroad are more, or we are receiving more investments, whether the outflow of foreign exchange in the form of investments is more, whether we are receiving more loans, or whether we are providing loans, whether we are net debtor or net creditor. So all these points are shown by the balance of payments. So it is a wider concept. On the other hand, balance of trade is only a narrow concept. It is only concerned with export and import of goods and services. So at the last, we can say that balance of payment is a broader concept, and it also includes balance of trade in addition to other items. Balance of trade is a significant component. Significant means important component of balance of payment. But balance of payment captures additional economic activities beyond just the import and export of goods and services. It means that in the case of balance of payment, we not only record transactions pertaining to export and import, but we also record the transactions pertaining to other items such as unilateral transfers, incomes, investment received from abroad, loans paid or loans received, etc. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.